Affordability. It is the issue in Vancouver's red-hot housing market. One of the more popular theories, foreign owners are to blame. But just how much foreign investment is in BC real estate? Well, that's the million-dollar question. There really isn't that much data out there. In fact, Stats Canada only recently started tracking non-resident owners in our market. But the idea that almost all of these properties are foreign-owned, it's time to burst that bubble. The numbers show that whatever impact non-residents are having on the market, there's still only a small slice, making up less than 5% of the total Metro Vancouver pie. And the closer the property is to Vancouver, the greater the chance it could be owned by a non-resident. Here's the caveat. What people want to know is how many foreign buyers are there in the market. But what this data is measuring is non-residents, and that could include Canadian citizens who live in another country. So those figures could be capturing more than just so-called foreigners. And these numbers are gathered from land titles. We still don't know where the money actually comes from. For example, proxy buyers, such as students, would not usually be counted as non-residents in this data, even if the funds were foreign. Numbered companies and speculators with offshore financing would also be missed. But putting aside how many foreigners are potentially in the market, there's also this question. Are they pricing out locals? In most healthy housing markets, home prices are tied to local incomes. For most Canadian cities, a single detached home costs 3 or 4 times the household income. But in West Vancouver, a place considered to be popular with foreign buyers, the average detached home price is 35 times the average local household income. A non-resident homeowner is more likely to own a more expensive property than the average citizen. Although there's not that much difference in the suburbs, in the city of Vancouver, there's a 45% price difference between residents and non-residents. Non-residents also seem to have condo fever, especially for newer developments. More than 20% of condos built since 2016 in Richmond and Vancouver are owned by non-residents. So what's being done? In August of 2016, the BC government introduced a 15% tax on foreign buyers in the hopes of making the city more affordable. That tax is now 20%. Will it all work? We'll just have to wait and see.